Good morning, everyone. This is Srikanth Rajan, and welcome back to the Wealth Management Podcast from mpinvest.com. So, talking about the markets have seen, of course, a Santa rally because yesterday, of course, we could see market going up slightly. On Friday, we did see the market going up, and there has been a Santa rally, but then it has not moved anywhere. So, if you look at where market is today, we are close to 21,450, which is exactly where it was on December 15th. So from there, on 15th and then 20th, that was last Wednesday, we could see a big fall, and from there, a recovery that is happening in progress. So overall, if you see, Indian markets have kind of consolidated with the huge volatility is what I would say at this point of time, and that is what is happening at this point of time. So if you look at, we had discussed this last time also, that Indian markets will not see major action because the institutionals will kind of take a break during this last week of the year, and this is when generally the HNIs, or I would say something like this, the big fishes of the sea are kind of taking a break. So the medium sized fishes are the ones who are going to kind of make some action. So that actually creates volatility further. So if you look at yesterday, how the markets opened positive, and from there it was a decent fall, and from there again a recovery. So this kind of volatility is expected, and now tomorrow being the monthly expiry, the yearly expiry, and the weekly expiry, the markets are going to be volatile. So I've kind of stayed away from the market. I had not taken any trade last week after the previous or Friday, and yesterday I did take a small trade which I'm holding, which I might exit with profit today and kind of stay away from the market for tomorrow. So that's a plan because I don't want volatility to hit me big. So at this point of time, as end of the year, I also would prefer the time to be say, using for as a vacation with my family, spending time with them. So that's something which is on the cards. So whatever position I'm having, which would be closed today, will not be taking much new positions today. Maybe a small trade based on market conditions, but not planning to hold it overnight to tomorrow. So that is the situation right now for traders point of view. As far as the investors are concerned, those who have already started on a SIP mode, yes, it's a great way to do. In fact, when you're doing a SIP mode, investment, the markets do reward you better. So it is always good to do that. So that is what is happening at this point of time. But this point of time is also a great time to be investing in, fixed return investments. So fixed return investments right now, since the interest rates are at the peak, the fixed return investments are something which is good to add to your portfolio at this point of time by locking in that high interest rate. When I say locking interest rate, I would not mean to put in FD, because in FD, what happens is you can put the maximum time you can lock in the high interest is up to 5 years, since the highest FD period is 10 years, 5 years. Now, whatever interest rate is going on right now, about 6%, 6.5%, that is something which can be locked in only for 5 years. Now, the way things are going, let me tell you something very important. If you look at a country like US, which is a developing country, the interest rates in FD is almost zero. So it's not nothing worth talking about. Their lending rates are only about 2 to 3% of interest rate. So in this kind of environment, what do they get? Now this is a common thing for all developing countries. Like in India, being a developing country, the interest rates are currently high, but as India starts developing further, the interest rates will only come further down. So at that, it is always good if you want to have a small portion of your fund to be allocated for a fixed return for a longer period. There are absolutely very good investment plans available only with a few companies, which of course can lock in your interest rate of 6 plus percent for more than 10 to 20 years. So that is something that you can diversify a portion. But then, how much is this portion that you should diversify? That is something based on your current investment level and holding. So that is where we can help you with. Do schedule a meeting with us at our website mpinvest.com, as mentioned here, and all of us we will have a meeting with you, understand your portfolio, and then help you understand how much of your investment go into a fixed return. So that is something. This is based on multiple things. Like, one is your risk taking ability, and two, how far is your investment goal. So these are few things that we would use to understand your requirements, and based on that suggest the right one. So that is one option that you should be doing at this point of time, because those people who had locked in their interest rates at about 8 and 9%, maybe 5-10 years back, are still enjoying that return when the entire market today is talking about 6% fixed return. So that is something that is really good, that can be done for a small portion of your fund. Apart from that, for equity portion, like I told you, one of the best option would be to go a SIP mode with this. And talking about the markets in longer term, we are of course bullish about the market. So next 5 to 10 years is going to be a big year for India as a country. So it is the right selection of mutual fund and a right selection of SIP mode that will help you make money in the market. And the best part is you can do all this with complete peace of mind, as we do the right selection for you and monitor the switching for you, so that you don't have to do this and you can focus on your work and continue to grow professionally, so that you can invest more and grow your investment more. So this is what we do at MPI Invest. So for that, you can schedule a meeting with us. Apart from that, the next important thing is we are starting off with our videos, separate video series or knowledge series from this week. So that is what I am kind of focusing on at this point of time. And we will not have a daily market report for this week from now. It will be, again, we'll be back with those regular videos from Sunday. That is a market pulse. So that's something that we would be carrying on with. This time is what I'm going to spend on working on few other videos and stuff, and kind of staying away from the market for trading. That would save my time. Naturally, being year end, this is a time where we don't have any appointments, so that would help us focus more on these new content series that we are planning. That will be educational series on investments for all of us, right? So that's something on the cards. If you have any suggestions or questions, do put it across in the comment section. We would be working on that. If you feel that there is some content that we need to cover in our daily sessions as well as these knowledge series, then definitely put that also. We will be working on that, and definitely making sure that we all grow financially together. So that's it for now. This is Srikanth Rajan signing off. Wishing you all a great week and a happy new year in advance, because we will now catch up only on Sunday, which is the last day of the year. So that's it for now. See you. Goodbye.